Hello everyone, Larry Lavrenchich for Ichimoku.co and ForexTrading.tv with the daily analysis for NYMEX Crude oil for the trading day ending Wednesday, November 27th, 2013. Well, a change of trend to the downside today. Candle has made a lower high and a lower low. Previous day's trading, we had the market change trend to the upside, attempting to rally through the important 94.63 level of resistance and being rejected from there in a major way today. Significantly, this market has taken out a couple of important support levels. The first being the level at 93.25 that has held on 4 or 5 occasions over the past couple of weeks, so a significant breakout down below in a fairly bearish manner. Also a significant breakout down below this 92.67 level, which is this swing low here, roughly, and a bearish close down below there. But importantly, the market was rejected from below the 92 level, and I suggest that that area around 92 and the low of the current candle is going to be very important if we are going to see this market continue trading lower. It will be a benchmark for this current trading in the short term to be watching, and if we do see strong early bearish activity down below there, we could quickly see the market testing down to $90.51. Now, interestingly, once again, for the third consecutive trading day, we've seen the Tenkan-sen, the green line here, act as resistance to this market. So price rejection from either above or at that level, and that's what we're seeing today on a fairly bearish candle, black body, where the sellers have found some downside momentum, obviously enough to take out those important support areas, but also closing with control, not strong control. There was that rejection from below the 92 level, but certainly there's no strength from the buyers in this market at the moment. In terms of the Fibonacci extension, we're examining the relationship of this new first time frame downtrend to the previous time the market's trending down, and here we're seeing the market interacting with the 100% level being rejected from there. So this suggests that there could be some buying coming in around this level. We saw buying coming in as evidenced by the shadow down below there, so we could see the market rally from this area, but let's not preempt the market. We are looking for a higher high and higher low if that does occur, but it does make the low of this current candle become important, and also that area at that 100% level. In terms of the Fibonacci retracement, trading in an expansive mode of that through the 100% level and being rejected from the 161.8% level. So the confluence of this rejection from below those two important Fibonacci levels does suggest that it's probably fairly important that we have seen that rejection from there. So really, if we are looking to go short, what we want to see is follow through. We want to see the market make a lower high and lower low, and if we don't see that, then we should really consider that those Fibonacci levels have been significant and may lead to the market rallying. Now, in terms of patterns, and if you recall, there was this rectangle type pattern that I highlighted with very well defined resistance, but not as well defined support. The swing low here, we've used that level as the support for the bottom barrier, and today we've seen the market testing below there and closing just around that level. So technically, with a close below the bottom barrier, we have completion of that pattern to the downside, suggesting that we may see the market trade lower. But with the rejection from there and the weak close below there, what I want to see is follow through to confirm this breakout. So I want to see the market make a lower high and lower low to have a lot more confidence in this breakout. And that rejection from below that area and the failure of the market to close in any way significantly down below, this does suggest that there is some doubt about whether we will see that follow through. Now, in terms of Ichimoku, obviously a bearish market in all three time frames. We have the market trading below the cloud, below the Kijun-sen, below the Tenkan-sen, and the Chikou span is below the corresponding price action. So confirming the negativity that we're seeing in all three time frames, and suggesting that there is a very real possibility of this market trading lower in line with the downside momentum that we've seen in net terms. So really, it makes this 92 area and the low of the current candle become very important. As I've mentioned, if we see the market successfully test down below the low, then we could quickly see the market testing down to the 90.51 area.